Good morning, everybody. Thursday, April 23rd. Sorry, it looked like we had something going on with the software there. Everything should be up and running. Somebody give me a, hey, I see you, Chris. Let me know that I'm not talking to myself, to my computer here. People are going to start talking if they think I'm just talking to the computer. Anyhow, good morning, Robert. Good morning, everybody. Great Thursday. I don't know if anybody's thumbs up. Good. All right, perfect. So we should be up and running. Unemployment numbers came out this morning. Before I start getting into everything, 4.4 million came in right in line with what the expectations were. So market actually rallied a little bit. We were down in terms of the futures. We were going to open about 30 points lower. We're about 30 points higher when I looked right before I jumped into the studio here. So kind of a little bit of a push here. The number, I think it was 11.2 million in terms of the recurring, and that's over the last 3 weeks. That's not any big surprise. We don't expect to see many people dropping off of that. Obviously, states are going to be opening up here in the next couple of days. Georgia, possibly. Now there's pressure from the president to not open. So it's kind of a push-pull here on what we're going to see in terms of opening the country. And I think you and I both know that even though we may open up the country a little sooner than expected, you're not going to get the activity that everybody was really looking for from just this boom, bang, here, we're open. Everything's not going to pick up right out of the gate. What we're going to talk about today, let's go here and look at the slide so that I can share the slide with you. We've been doing a really good job of staying on point with the message and getting ourselves out of here with 15 minutes before the close. I hope you're prepared just a little bit more after our time together on trading the market. So what are we talking about today? First, we're going to talk about the market's technical test that it worked itself into yesterday, the S&P 500 specifically. The chart, we're going to take a look at the chart and also what has to happen to get us either to move higher or lower. This is going to be a fulcrum, whatever you want to call it, a leverage point. It's going to be an inflection point. There are all kinds of names that we can put on it, but the S&P 500's 2,800 level is definitely going to be something that the traders are watching right now. And there's a couple technical trend lines that are right around there I want to show you as well, because it does have implications beyond today and actually even beyond next week here. So we're going to look at that technical test. Today's earnings reactions, buy, hold, sell. So we had some companies, Citrix, Domino's Pizza, a few companies come out, CTXS yesterday. Really wasn't a big headline day. We've got Intel coming out tonight after the close, and then things kind of die down for earnings for the rest of the week. But I want to take a look at 3 or 4 of the companies that have reported over the last 24 hours and give you a buy, sell, or hold on them along with some prices so you can actually walk away with some tradable ideas here. 5 stocks that have regained their bullish mojo. I just like saying mojo when I put things like this together. These are stocks. If I look at the S&P 500, the number of stocks in the S&P 500 that are breaking above their 50-day moving averages has been on the rise. But if you've read any of my commentary before, you know that breaking above is not good enough. It's the direction of the 50-day moving average. I'll explain a little bit behind the background on that, the study I've done, and give you 5 stocks that are in a bullish trend right now, a bullish trend, not just breaking above their 50-day moving average. And then finally, we're going to hit how to trade today's market. It's going to be a boring one because yesterday was bump day. We talk about bump day, and I'm just going to call it bump day from now on Wednesday instead of hump day. Thursday and Friday are positioning days for the market. Futures are up a little bit right now, but I expect to see that probably soften up a little bit. Investors have been putting a lot of money towards the market and having a little bit, at least when you look at the professionals, a little bit of second thought in terms of, is this time to take some profits off the table? Let's face it, a 20% rally from the bottom is nothing to sneeze at. That's a year's worth of gains. So a lot of the professional money managers are going to look at this from a perspective of it's time to lock in some of the profits that they've got for jumping in at or near the bottom on March 23rd. That's going to put a little bit of pressure on the stock market. It doesn't mean that the market's going to go down from here. It also doesn't mean it's going to go up. I think you're going to see a little bit of a tug of war here around this 2,800 level. This isn't the first time we've seen it. We've seen it last week as well. So with that said, let's jump into the slides. If you got any questions, you can pop them up in the chat area as we go on. And I'm kind of excited. I've been thinking a little more about this idea of building the perfect 2021 portfolio. I'm going to have to bounce that through you guys. I think it's a project that we can start working on here immediately or maybe at the beginning of May and really start to take, stock by stock, building up the next bull market portfolio, the portfolio you have to have for the next bull market. So let's talk about the technical test. Futures are trade. Oh, this is actually a slide from yesterday. I apologize. I'm just going to make it up right now. For some reason I didn't delete that slide. The S&P 500's technical test. So here we are. Yesterday we closed right at 2,800. I've told you before that 2,800, 2,900. You can see it there actually on the chart. 2,700. Actually, you can see it there on the chart. Round numbers are important for investors. Just as important for professional investors as they are your average beginning investor, experienced investor, whatever. They're important because they represent milestones. They're easy to identify. S&P 500, 2,800. Last time we were there, we failed. We started to pull back. Or last time we got support and we bounced higher. Last time we got there, we actually did break above, got some support, popped back up above, and that was last Friday. Then you've got Monday, Tuesday, Wednesday, or I'm sorry, Monday, Tuesday, here's your Friday sliding down. So, and we're fighting with the 50-day at the same time. This is making up that technical test that the market has got to get through over the next couple of days. Here's a couple of scenarios that we could see play out. You could see a good earnings week coming next week, and all of a sudden we're back up above the 2850 and the 50-day moving average. We have to have 2 days. One of my rules of thumb of technical trading, you have to have 2 days above the 50-day moving average or the 200-day moving average. And in a market like this, you really need to have 3 or 4 before you can claim victory and say, okay, we broke it above the 50-day moving average. Because you can see in that chart, when we broke above it last week, it very quickly reversed again and came back down. So here's your Thursday break above it. And that's the first time we traded above the 50-day moving average since February, what it'd be 22nd or somewhere around there. So it's been 3 months almost, or 2 months, 2 full months almost. So it's natural to see this type of activity, but this is going to be a critical test for the market. Then you've got your 2,800 level. If we break above the 50-day moving average and then come back below the 28, you're going to get a vote of no confidence from the market. And I think that that's going to give us a trip down to 2,700, 2,750 will be the first stop, but 2,700 will be the goal from there. The reason I give you this is the way you're going to paint out, or we're going to paint out how we trade the next week or two. And this is a market that you have to take a week or two at a time. Right now, I've told my night trader subscribers that we need to look at some of our positions from a 10-day. And right now we're in today. This will be day 3 of that 10-day period in terms of the holding period and how we let them work out. It's because of technical tests like this that are going on right now. If we break above the 50-day, or if we see a lot of the stocks start to break back higher, then it's time to cut some of those put positions loose and start to add calls. It's time to add a few calls regardless right now, because we are seeing some signs of optimism. But then again, I'll always go back to my thought, or my saying, that it's hard to be bullish on quantitative easing policy alone. So fiscal policy, the Fed, is not something that I want to be bullish on, because as we've seen, it goes away after that high of the opium high wears off. But we have to be very realistic when we watch this and understand that every time they dump up or back up with a dump truck of money, they're going to get investors excited, at least for a few days. So that test, 2,800 and the 50-day on the moving average on the S&P 500, I want you to watch it at home. I'll do the same. I'm going to have some commentary that's coming down the pike here in the next day or two on moneymorning.com, and you'll want to read that as well. That is segment number 1, the test. Segment number 2, earnings reactions. As I mentioned, we had a number of companies that came out. These, a lot of, I don't want to put them down, but a lot of B-rated companies, a lot of B-list companies and some C-list companies right now. Regional banks, Bank of the Ozarks came out, and the regional bank story wasn't a good one when I looked at the regionals last night after they announced their earnings. But a couple of them that I want you to take a look at, because these are companies that we've been talking about, and these are the companies that not only we've been talking about here, I've been talking about with my night trader subscribers, but also these are some of the larger companies that were quite frankly on the radar yesterday. So Citrix is a company I've talked about a lot. It's funny, I think I mentioned this yesterday. A lot of people don't like Citrix system or they don't like their platform, but the bottom line is that they're a gold standard in terms of security for remote working. The company beat by 55 cents. They beat on their revenue. So both top and bottom line, they beat, and they gave guidance for second quarter and fiscal year 2020 in line. Now, of course, they've been doing some pretty good business here for the last couple of months. So that is one reason that you are seeing them actually be able to hit those markets. Quarter one saw a surge in demand as more people worked at home. They're in the same business as Zoom. Zoom saw a huge surge as well. A couple of other web services that allow you to do the conferences. Cisco has their own as well. It's not surprising that they got a surge in activity in Q1. The thing that's interesting about this is they are changing the way that we're going to do business. And the pandemic, the COVID-19 is changing ways that we're going to be doing business as well. I can't tell you the number of times that I've done these conferences, 4 and 5 a day, where I'm in front of my computer. And these used to be meetings that people would fly me out to and say, hey, why don't you just come out for a couple of days or come out for a day and stay in a hotel? So $1,000, $2,000 worth of expenses now has gone by the wayside because nobody really wanted to get on Zoom or any of these other devices and use them because it was impersonal. But now we're finding that we can do business and we do it effectively. So these are game changers right now for these companies, this situation. And right now I look at Citrix and Zoom and they're going to be in a similar situation. We'll look at the chart for Zoom in just a moment, but the stock remains bullish. The good fundamental news from them. They got a boost from the first quarter. Keep an eye on Citrix right now. Domino's Pizza beats by 72 cents, reports revenues in line. Domino's is one of those companies like Chipotle. We talked about Chipotle yesterday with their earnings. They have been doing well. They've done a good job of getting the business, and they were already in the business of just delivering pizza, but they made sure that they've been doing it safe, fast, hot, etc. Same store sales increased by 1.6%. It's a little lighter than I think I expected to see, and I think the street as well, which is part of the reason why you're probably seeing them withdraw 2 to 3 years worth of outlook right now. They see this as a transition period, not necessarily for Domino's, but for the restaurant industry. Think about this, and this goes back to that idea of how the COVID-19 pandemic is changing us. I'm cooking and I tell you guys what I'm doing because I think it's that walk down Main Street. I'm cooking fish and vegetables and stuff like this that typically I would have been ordering in food or I would have gone to a restaurant a few months ago. Our habits as consumers and especially consumers of food are changing. Sure, we're probably going to go back to ordering some food maybe 2 days a week or 1 day a week, but it's kind of fun cooking at home. And I think that's what's happening right now with Domino's, looking out forward, saying, for the next 2 or 3 years, we're going to see how this shakes out. You're going to see a lot of the dine-in restaurants doing the same thing. And when you think about the dine-in restaurants, also, you've got that tie back to business travel. And if we're doing things online, meetings online, we're not staying in hotels and going to fancy dinners. So there's a ripple effect that's going to change really a lot of things around the businesses that we use. So just throwing out another one of those little, we'll call them a Chris thought here on that. So Target's hot because they had good. I'm going to try to pick some of these off. They had great online sales. They're in their numbers. So Target's retail numbers are doing well. They're moving inventory, whereas other people are not. As I described yesterday, they're going to be selling their inventory to Ollie's and other companies. But Target is hot today. They came out, I think it was a 5% increase in their online retail business. So that's why they're hot today. Who will be the fresh mixed drink delivery platform? We have those in Cincinnati, Andrew. We actually have they're takeout companies, but you can go down. I go to my local haunt, Longfellow, and I can pick up a cocktail right there, right in the back. And right off of the back, they serve it up in a little plastic container. There are 5 of them in each one, and you take it home. And HJ, I've lost 7 due to my cooking. And I'm cooking pretty well, so I've lost 7, and I haven't been working out. I normally work out. See, we're changing for the better with all of this. Anyhow, let me get back to it. CSX beats by 5 cents, reports revenues in line. let's throw out the number here because I want you to look at something that I look at every time the quarter comes around for the companies, and I get a weekly rail car report. And I think this is one of the more interesting things you're going to pull from CSX's numbers. And this is volume in terms of per category on their rail cars. This gives you an insight into, you can look this data through and find companies like the chemicals and basic material companies that haven't reported. We'll see some agriculture and food companies. How about Tyson that had to close down a plant, quote unquote, voluntarily? And we talked about Tyson last week, how I think they need to be high on your radar screen in terms of watching what's going on with the Smithfield plant that was out in South Dakota. And the flip side of that is Hormel. I think there's still a bull because we're seeing all of these agriculture and food product problems, possibly in the supply stream. I'm getting offline though. Automotive decline due to North American vehicle production, including automotive plant closures in March due to the pandemic. I think we all know that Ford, GM, they're not going to have good quarters as we move on through there. So this is giving you a glance at, okay, this really is confirming they're not selling the vehicles because they're not having them delivered. They get them delivered in an order or in a fashion that has the car on the lot a couple of days before they sell it. Right now, if they're not being delivered to the lot, they're not selling them at all. Minerals, higher shipment for, and this is key, higher shipment for highway construction and paving projects. So now you've got some of those companies out there, McCormick, you've got Trinity, possibly Trinity Industries, TRN, that would be a beneficiary of those minerals being shipped because we are seeing highway construction. As a matter of fact, I thought it was interesting. One of our more heavily trafficked thoroughfares here in Cincinnati, Liberty Avenue, it's been having some problems here and there, and they've had a plan over the next year or so to tear it up. But all of a sudden, because the traffic has lightened up in downtown Cincinnati, a few days ago, they ripped the hell out of that street and they're putting in new infrastructure under it. And the city is in trouble. We're cutting 30% of our workforce, but they're taking advantage of the lighter traffic to get out there and get jobs like this done. So some of those raw materials that are needed for that, asphalt, all concrete, ready mix, a lot of ready mix that'll go into that. That's going to be used. And in Trinity, they make the guardrails for the sides of roads. They'll be used as well. So something to look at in terms of, you can walk down Main Street with this data and figure out where we're looking for spots where we could see some positive green shoots in the economy. Metals and equipment, higher shipment, the scrap metals coming in, partially offset by lower shipments. So you've got scrap coming in. People are buying scrap. That makes sense. That's not going to stop. But construction steel markets are slowing down here. So it gives you an idea of looking at the commercial construction area. Even the home builders, I noticed that one of the shipments on wood was lower. Fertilizer, due to lower short haul phosphate shipments, offset by higher long haul fertilizer shipments. So we've got fertilizer that's going from coast to coast, not in between smaller locations. Kind of a neat way to go through this report, and I hope you learned something just by going through this report and finding the opportunities within just little comments here. I'm going to start looking at some of the construction companies that do highway construction. Trinity, I'm going to look at some of the materials. So something to be said there. Maybe we'll hit that tomorrow. Medical and pharma. HJ, I love medical and pharma. Eli Lilly, they had a decent earnings report. I think you're going to see that healthcare is coming back right now. TRN is the ticker for Trinity, and you can't hold me to that. Let me make sure. Last time I traded Trinity was probably 7 years ago. Yes, it is Trinity Industries. And look at the base that it's putting in right at $15. If you look at that chart, it's going to be a little hard to see. But if you look at this chart, we've got a base that's been putting in place at 15 bucks. So that's some relative strength, believe it or not. It's not rallied as much, but it's been holding itself in at 15 bucks. I think that's kind of a neat little takeaway from that. So let's go back to let's go back real quickly to the slide. And next slide, please. Citrix. Citrix, this is the chart of Citrix. Obviously a good earnings report, up trading about around 150. When I checked before I came down to the studio here, pre-market had it trading around 145, 144. It is you know what, this is a company that has been in my best in breed. I love the fact that if I should have packed in another chart here. You've seen a consolidation across the top here, which tells us that we're this quiet period over the last 10 days or so is getting ready to see another storm. Look, it happened here where we've got this quiet period in the stock, more volatility, but the closing price is not going anywhere. And obviously we had a breakdown after that. So in this particular case, I think what you're going to see is after this earnings report, some people taking that and selling into the strength, the news, with the stock trading above 150 now and just been on fire. The stock's up more than 40% to year to date. JM, I've got to disagree with you. I put all of these together every morning. Sorry, guys. It's the love of the sport, though. I sit down at about 5 in the morning and start putting these slides together for you. So that's why there are errors in them. If I have my team put them together, there wouldn't be errors in them. So no, I put these together, but it is love of the sport. I enjoy doing this, and I appreciate, Jim, you giving me some kind comments for them. I really like doing this and spending the time with you guys. So anyhow, watch for Citrix. We're going to pull a zoom here. If you're looking at Citrix the way I am right now, I looked at Zoom when it was at 140, told you to buy it at 120. Actually, right now with Zoom at 150, I think you can buy it at 130 here in the next couple of weeks. Citrix at 150, I think you could put in an order for 137.50 on Citrix right now if you like it the way I do. Keeps it above its 50-day moving average. A 20-day moving average will get broken, the trader's trend line, but I'm okay with that happening right now in the short term. 137.50 is my limit order area that I'd be looking at on Citrix here. Domino's Pizza, much of the same story here. I think you're going to see Domino that is going to be Domino's is going to run into a little bit of selling pressure here, but I think the stock is still going to remain in its bullish channel. 360 is where it's going to pull back to, according to what I looked at last night, especially with the options activity. So I'd be a buyer of Domino's right now. I think it's going to isolate itself a bit because they also came out with or I should say dropped their guidance for the next couple of years here. So you're going to see people that are going to kind of look at that a little cross-eyed or with a weary eye right now. Don't think you're going to see a 5-day or 10-day run of 10% here, but I think you're going to see probably a pullback to that 360, maybe even close to 350, and then it'll be raced back on again for Domino's Pizza, especially if we see delays in this opening up of states and cities. CSX, and I'm not sure why there is a chart of USO in there. There's one of those pre-mentioned errors for you, just so we can actually, we know now it is live. It's not Memorex. I doubt that anybody's going to remember that reference. My gosh. So here's your chart of CSX. I'll bring it up live on the screen for you. We've seen a consolidation in the top at 62 bucks. The 50-day moving average is trading right above it in a downward trend. And what this means for me, what I'm looking at is a break of this 20-day moving average. Unfortunately, I think this puts in I feel this puts in a bearish situation for CSX right now. I don't think that you're going to find many companies that are going to continue to see strength in the transports right now after the rally we've had. But in this particular case, watch for a break below $60 in the 20-day moving average on CSX. And I think that's a bearish signal that you could probably have a stock that's going to run a good 10% lower. Yes, cassette tapes did used to rule, and I still have a reel-to-reel that with Maxell tapes laying in boxes that my father gave it to me. Reel-to-reel. I'm sure I could probably put it up in my living room, and all the people in my neighborhood would think I was cool because record players are back in. So I need to get all my old vinyl out too. Anyhow, back to CSX, guys. Break that 60, and I think we got a 5 to 10% move lower, probably in the order of 10% down to that 54 level. I'll look at that DHT and INO in just a second for you, Sergio. You're being persistent with it today. I'm not saying that in a mean way. I'm saying it good. Way to keep raising your hand, my friend. I'll get to it for sure. USO. Hold on. Let me finish up this, and then I'm going to take my two my two questions that have been pressing here, and it's on USO and it's been on the DHT and INO. So let's move on down. 5 stocks that have regained their mojo. This is, we are going to go long today, guys. We'll go about 5 or 10. No, I mean, take the vinyl back out. It's not been out. I'm not one of the cool kids. Everybody else has had their vinyl out. Anyhow, 5 stocks that have regained their bullish mojo. These are 5 stocks that not only are above their 50-day moving average, but have a 50-day moving average that's trending higher. This is important, folks, because let me bring it back to the screen for a second. The 50-day moving average, I did a trading study on it back in 1999, then another one back in 2003. Just check it, and I check it every once in a while, the results from it, and it comes up the same every time. Simple as this, and this is why the 50-day is my favorite trend line to watch. We talk about the technical or the trader's trend line, and that's because we're in a volatile market. 50-day is one of those that is my island, my deserted island measures here. So 50-day moving average, if it's trending higher, there's a 2-to-1 chance the stock's going to go higher the next day. If it's trending lower, there's a 2-to-1 chance it's going to go lower the next day. Believe it or not, that's true. I tested all the 500 of the S&P 500 companies for, I think it was a 12-year period, and just basically said, if the slope of the 50-day moving average is positive, what happens the day after, the next day? And overwhelmingly, it's a 2-to-1 ratio that you've got in terms of the probability to go higher the next day. When it flattens out, the stocks don't have any bias. And then when it goes lower, it's a 2-to-1 ratio or a 2-to-1 probability you're going to see it move lower the next day. I love it because it works both ways. Anybody who does studies on the market knows that you want to see an indicator work in all types of extremes, and this one does it. That's why we're looking at what we're looking at right now. So there's your intro to what we're watching here. Remember the guy with the poster? I still have the poster rolled up at my parents' house, sitting with the glasses, with the speakers in front of him, and a wine glass that scoots across the table into his hand for the Memorex commercial. We're going old school with the market open today, folks. So 5 stocks under. With that explanation, the percentage of stocks trading above their 50-day average is on the decline again. So we're seeing fewer companies trade above their 50-day moving average, which tells us it's technical test that we're at right now with the S&P 500 that we covered is very key. Bullish 50-day trends are a better judge of technical strength or weakness. As of this morning, fewer than 100 companies tracked by my database of over 8,000 have bullish 50-day trends. 1.25%, we'll call it, have bullish trends. So these are rarities to find, and here's one that everybody's going to know: Shopify. Bullish on Shopify. Look at the crossover of the 20-day above the 50-day here. Stock popped up to 650. I think we'll see it pull back to that 575 if you're looking to put a limit order in. It's going to be an expensive option if you're looking to buy options at it. Maybe you do a spread. That's something for you to decide. I'm not doing a recommendation on this. Just throwing a great trade idea your way. 575 is your pullback level, though, but look at this trend, and it's only going to get stronger here as we continue to see Shopify. Their business is doing well and is going to continue to do well. Next one I've got for you, Digital Realty Trust. I talked about this a couple of weeks ago. We're not making any less data. There need to be places to store it. DLR does exactly that. I was talking about it when it was down around 130 or so. Now we're up at 150. I think you can buy the 150 right now, to be honest with you, because of this little volatility dance we're doing across 150, 142 and a half. But if you really want to get picky and not pay too much, go ahead and go in with a bid of 145 or 142. You can save a little bit of money here, maybe, not a whole lot, but you can make, let's face it, we feel a lot better when we buy a stock when it goes on sale here. So 150, I think you see the breakout there, and this stock is going, or this REIT is going up to 160, 165 in pretty short order right now, because it's got a dividend yield, unlike the rest of the, and this is an important fact, unlike the rest of the REITs that are out there that everybody's worried about people being able to collect rent on. These, whether it be corporate workspaces, whether they be residential REITs, whatever they are, Digital Realty Trust is still going to have the bills paid because people are paying to store their data farms. So I like this one to shoot up and outperform the rest of the IYR area. Let's go back to the screen here and wrap it up pretty quickly so I can hit those 2 or 3 charts for you guys. Don't want to neglect it. Etsy, another one that I used in fast profits. I love the stock. Look at it topping out at 64 here. The company is just doing very well in this market right now, obviously, because you can not only make your goods and sell them, but I think I told you the canoe story. I'm making a canoe myself at home, which is turning out to be a really fun project. But I've watched the prices of redwood canoes and cedar canoes go through the roof on Etsy. And what it tells me is that Etsy has now a viable marketplace. It's not that somebody puts a canoe up there and tries to sell it for $1,500. They were selling them for $1,500 a couple of months ago. Now all of a sudden they're selling them for $3,500 because there are other people that are out there trying to buy those. There's demand through Etsy. It's a great indicator on how Etsy's business is taking off right now, when people are willing to pay more than double what they were a couple months ago for a homemade canoe. And it gets shipped right to your house, unless you're bullheaded like me and you need to try to make your own and hopefully not lose it off the back of my truck one day. So anyhow, now on to the next one is Humana. Healthcare stocks coming alive. We've talked a lot about UNH. You and I have. Humana is another one I just wanted to put up there instead of a chart of UNH. UNH is in the same situation. Humana's 50 days just now turning up, and the 20 days crossing above it tells me we're going to have a breakout in the stock. And at the same time, the stock's kind of gotten quiet here. Same thing happened here, except we had a 50-day that was rolling over and at that point, obviously, it was giving you more of a bearish. We're rolling up now, and I think we're going to have a breakout above that 380. Do I have a picture of the canoe with one end up and one end down? Don't forget. No, I won't forget. I'm going to have pictures of this thing from every angle, and I'll share them with you if you like, guys. So Newmont is the 5th. Newmont Mining, gold. I've seen Nugget coming up right now. I've seen all of the gold is officially getting warmer. Gold, I know I've talked about how it was trading in a range, and it was trading in a range, and we're now seeing breakouts and a trend forming in gold. Therefore, Newmont Mining, Randgold, Barrick Gold, a couple of the other smaller ones as well are starting to break out of their ranges as well. Newmont took out 60 yesterday. We saw Barrick Gold take out 25 yesterday. Those of you that trade with me on the night trader system know that we took a position in Barrick Gold yesterday that's up 10% after the close. And I'm looking for that to move even higher today. So Newmont is one of those bullish 50-day trend line. It's had its mojo really since December here, but now we're starting to see the breakouts that go with that. That was quick. How do we trade the market? The bump day played out as expected. That was yesterday. Thursdays and Fridays at positioning days. Watch that data that came out this morning, because it's going to be telling us what's going to happen with the market. I'm going to hit those charts here in just a second. Let me finish this up. Thursday and Friday have been positioning days for traders. Add exposure to the trending gold trade, not oil trade. Another mistake. I'm going to give somebody $1 every time they find one of the mistakes before I bring it up. If you guys want, we can play that college game. Add exposure to the trending gold trade, please. Not the oil trade, because the oil trade, as we all know, is not trending, except it's going in the wrong direction. And then watch the slippery profit taking in the NASDAQ 100. I don't know if you noticed it, but if you've been watching Apple, Microsoft to some degree, NVIDIA, a lot of the semiconductors have been starting to see some weakness. And these are the companies that have been pulling the NASDAQ 100 out ahead of the rest of the market for months now. Even going back to 2019, the NASDAQ 100 has been the place to be. I describe it as the large cap. It is the Dow that used to be. It's the index that people look at in terms of safety and growth right now, when they're looking at the Dow as a index that's just old and can't be invested in, hard to trade. But watch the slippage that we're having there in some of those companies. We're seeing some profit taking, and that's telling us again, if money's coming out of the market and going into bond market, it leaves us a little high and dry, or leaves us in rarefied air, let's say. So let's go back and look at those charts real quickly. I'm going to flash 3 of them up. I think we had, I've got to scroll up our I've got to scroll up. Here we go. DHT. Sorry, took me a second. You guys are talkative today, and I love it. Love it when I get the comment. I actually download the comments, the chat afterwards, and take a look at it so that I can see, what everybody's saying. Because I miss some of the the actual comments as I'm going through, and you can tell I try. But so DHT Holdings. What you did, for those of you that don't know, DHT is double hull tankers. DHT, that's what that stands for. Oil tankers right now, it's getting ready to make a breakout above 860. I think this is a hold still. They are still trying to figure out, and last night they had a logistician, I guess you would say, a logistics specialist on CNBC talking about how they're literally trying to figure out where to put more and more oil. These companies are going to be getting paid to park their tankers out offside of the California coast and those places where the refineries are, Texas, etc. This is a company that I think you're going to see march up to $10 or so. The oil glut is not going to go away until we get production take care of. Production doesn't start going down until after May 1st. That's when Saudi Arabia and Russia are supposed to make those cuts. It's not something that was supposed to happen immediately. It was actually something that is phased in. And then next thing is you're going to see us making cuts. I think it's May 5th that the Cinco de Mayo, that the Texas Railway Commission meets and decides whether or not they're going to cut some production in Texas. But right now, DHT, like the hold, I wouldn't be getting rid of it. If you've got large profits in it, if you bought it down around 680 and you've got a large profit in it, perhaps you put in a bit of a trailing stop, maybe a 5% trailing stop on this, and put it in today, because at 835 it gives you a little bit of a bump. You can see what happened here in April when we ran higher and came back down. And then if this comes down right now, if the oil situation stays where it's at, if it comes down to a price of 740, that's a price to get back in. DHT is at 740. I don't own it. If I were looking to buy into it, I'd be looking to buy it at 740 right now. I'd have a tight trailing stop on it when it's trading at 835 right now. 400,000 a day per tanker. I heard $250,000. Obviously, it's going to depend upon the size of the tanker, though. The other ticker was, I'm having to scroll up here again one more time. Sorry, guys. Give me a second. INO. So here we go. Innova Pharmaceuticals, the pharmaceutical companies, biotech companies, hot on my list right now. I'm not sure whether you just want to look at a buy, hold, or sell. It is a buy. Let's pull up real quickly. I'll go one step further. We got 3 minutes until the market opens, but I'll pull up my best in breed on INO just so we can see where it is at. I'm sure it's going to be an 8. I'm guessing it's an 8 or a 9. Gotta bear with me for a second. I just need to have these pre-checked. Yeah, we've got an 8 on INO, which makes it a buy according to my best in breed and my technical models. 100% analyst ratings on the stock. The option volume is really light. No short interest, which for a pharmaceutical is actually a little bit rare. And I don't think it's because we've seen a jump in the in the average daily volume here of late. Short interest ratio. Yeah, there's your short interest ratio. Look at this short covering that's happened here in INO in the last 6 months. And you go back to that chart of INO, and here's where it started. So you've been consistently adding or taking away shorts. I mean, it was up 850% there. Now it's up 481% from when we saw those shorts start to go away. I'm really interested in seeing when the actual shorts went out. So look at this, guys. The short interest is actually sitting at, the short interest ratio is sitting at a high right now. I pulled up short interest when I pulled that up. Holy cow. So we're going to get a short interest ratio or a short covering, a short squeeze, and it's going underway. It's just started here in the last 3 days. You're going to get this stock that's going to probably come up to 15 again, somewhere around 15 or so on INO. Option volume is really weak. I'm not going to look at the spreads on it right now, but I think that you're probably going to find they're going to be expensive. You want to leverage it some other way, or be ready to pay up for it, and watch those premiums if they start to collapse when the stock gets up around 18 bucks, maybe even 15 bucks. All right, there we got it, guys. I hope I got as many questions as possible. You know what? Tomorrow's Friday. We're going to do Free Flow Friday. I'm going to take all your questions. Get your ticker symbols ready. Have them ready to go. Get your questions ready. I'll keep the slides to a short, but we're going to do the last 15 minutes where I'm just going to take your questions one at a time. Boom, 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 boom. That's more fun for me, and I think it's probably more fun for you, and you get more out of it at that point. Thanks for your time today. I'll see you tomorrow. Free Flow Friday, I think I called it. Free Flow Friday is what we're going to call it. 8:45, I'll be here. Maybe I'll turn everything on a little earlier and see if I can catch you talking about me. Until then, I wish you the best trading success. Hope you have a great day. Stay safe. Get outside, walk the dogs, do whatever you got to do to get some air. Have a great trading day. Let's make some money today. Thanks, guys.